quite the same as what people are projecting for renewables. Another issue is that that transition, nobody really knows how long it's going to take or what it's going to look like. So, for example, there's a German economist, Hans Werner Sinn, who has talked about a green paradox. And that basically is, if you're an oil producer, especially one who has a high cost of extraction or not much in the ground left, and everybody's, suddenly looks serious about switching to renewables and reducing demand for oil, what do? Well, you start pumping it out of the ground as fast as you can.
Right.
And you pump it into the market. And what happens then? Well, the price of oil goes down. So suddenly you have the sort of inverse response by different countries as they try and just not be left with stranded assets. And it doesn't just go for oil; it's happening with coal. You see, Australia's opening big new mines to supply Asia with coal. Russia's trying to. Putin the other day was telling the coal industry in Russia to build more infrastructure to export more coal. So there is this sort of inverse reaction that means that that would slow down the switch to renewables, because renewables would have to get that much cheaper in order to outcompete oil and coal and so on. So it's a complicated process, and it's very difficult to project.
Does something replace oil? Is it those rare earths? Is it batteries? Is it the ability to manufacture batteries? I mean, batteries, as you write, the demand is going to be huge.
Demand will be enormous, and there's only certain places that have cobalt, which at the moment, the main technology for batteries is lithium, and that needs cobalt. So, that's in the Congo, for example, has a huge slice of the global production of cobalt, and you can see a potential problem right there. It's not necessarily that China controls it, but it is that, or somebody else. But Congo is a very unstable place. You've had that problem with oil for a long time. The Middle East, parts of the Middle East that produce oil are unstable, and that creates issues for the market. So, there are, patterns that are likely to develop, and it's rather difficult. There are so many variables. How many new mines, cobalt mines, will be discovered? We don't really know. We've been through this process with oil where we had, fears of peak oil, where there wasn't going to be enough oil in the ground, and now suddenly we're talking about peak demand where there's, too much oil in the ground. So you can have the same thing. We simply, once you start looking, where are all the rare earths? Where else can you dig them out of the ground? Where's all the cobalt? Once you start looking, you may find more. But if you don't, how are you going to make all those batteries? Will there be a new technology that arrives that doesn't require cobalt? So these are all open questions that nobody can answer now. But what it does suggest is that a smooth transition where nobody gets hurt is quite unlikely.
All right. It is great stuff and a must read. Mark, thank you so much. Really appreciate it. Mark Champion, staying up for us out there in London, where it's a little bit later now.
Yeah, appreciate it, Mark.
Totally.
It's worth it. That's such a fantastic story.
It really is kind of a deep thought there. Senior reporter for international affairs at Bloomberg News on the phone from London. All right, back to World and National News.
Let's get a check with Nancy Lyons in Washington, D.C. Hey, Nance.
Hey, Tim. Moderna says it has begun a study of its COVID-19 vaccine in children under the age of 12, including babies as young as 6 months. The drug company says the trial will initially include nearly 7,000 healthy participants in both the U.S. and Canada. New protections for children are being put in place by Facebook. As Bloomberg's Nathan Hager reports, it's putting limits on how adults can interact with teens on Instagram.
The social network says they won't be allowed to contact 13 to 18-year-olds who don't already follow them on the photo-sharing app, and it plans to assign teams to go after users who may be lying about their age through artificial intelligence and machine learning. Instagram also plans to frequently remind teen users to check their privacy settings. Social networks have been under new scrutiny, with sex traffickers using them to recruit women and girls during COVID lockdowns. Nathan Hager, Bloomberg Radio.
Explorers have found more Dead Sea Scrolls in a Judean desert cave that could only be reached by rappelling down a steep cliff. These are the first scroll fragments discovered since the Dead Sea Scrolls were uncovered in the 1940s. The scrolls are believed to be the earliest known copies of the Bible. Orrin Abelman is with the Israel Antiquities Authority.
We found one fragment from the book of Zechariah, chapter 8, verses 16 to 17. We also found another small fragment from the book of Nahum, chapter 1, verse 5. These were parts of a longer scroll that contained all the 12 minor prophets.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic in our Interactive Brokers studio. And this story caught our attention. It is about a New York-based healthcare startup apparently becoming the city's latest unicorn. The tech industry we're seeing pushing deeper into health and medicine, which we know is certainly on our radar because of the pandemic.
Okay, let's start with health and medicine and then get to the sort of the West Coast, East Coast unicorn battle, because that is something that plays out in the story as well. Unite Us is a New York-based healthcare startup, and it is the city's latest unicorn, as Carol talks about. It's legally named Unite USA, Inc. It plans to announce today that it raised $150 million from investors, so that would value it at $1.6 billion. You talked about healthcare and health tech. I always think back to the Walter Isaacson Steve Jobs book when I hear about the revolution in health tech, because that was one big takeaway that I had when I read that. At this point, gosh, close to a decade ago. Yeah. Because there was one area that Isaacson talked to Jobs about during this process that he wanted Apple to move into. It was health technology and healthcare. And Apple has made strides in that area, but there are a lot of startups that are working on it too.
Yeah, listen, if you think about the watch, right? And you think about it does certain things, but there is maybe the potential for it to do a lot more in terms of monitoring your health system. So you talk about the East Coast, West Coast rivalry.
Yeah. So, I mean, there are, when it comes to tech funding, right, if you think about what happens in Silicon Valley, it's like Silicon Valley versus Silicon Alley. It's Sand Hill Road, is where all the venture capitalists are based in California. And there is like a point of pride, I think, among New Yorkers, at least there was over the last decade, about companies in New York City that are not necessarily displacing, but are joining unicorns on the West Coast and sort of giving them a run for their money. And investors certainly like it too.
Yeah, increasingly we are seeing that in terms of, that's a really good point.
It used to be news.
Well, it did used to. And we've seen over the last decade, maybe even the last 20 years, we've seen certainly a tech industry develop big time here in New York City.
Yeah, and I think the big question is what happens with Silicon Valley over the next few years as more and more companies are looking at remote work in the wake of the pandemic. Do we see a new hub emerge, or does Silicon Valley keep that title?
Yeah, there's some pretty interesting investors in this company as well, but you're going to have to go to Bloomberg.com to check it out. Just going to say, this is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. NASDAQ back in the green, S&P lower, little changed right now. The Dow does remain lower. Let's head right over to the first word breaking news desk for today's afternoon call, and here he is, Bill Maloney.
And good afternoon, Charlie. The tape is a bit quiet today with the Dow currently down 95 points. S&P's dropped 2, and like you said, NASDAQ trading higher by 12. The U.S. 10-year yield at 1.62%. Gold is little changed. Oil is down. And transports fall 168 points. Among the main 11 S&P sectors, leaders were telecom and tech. Energy was under pressure for a second day. And leaders to the upside in the Dow, Intel and Apple, while Boeing fell 3.6% and led to the downside. In other news, Bill Gross said another Operation Twist may be in our future. Democrats drafted a bill to expand U.S. semiconductor production, and First Energy neared a deal to give Carl Icahn 2 board seats. Wrapping things up, CrowdStrike reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg Type Squawk SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we often talk about shopping and buying local, certainly, supporting small business as a consumer. Well, the same can be true, Tim, when it comes to city and state governments, also thinking and buying local when it comes to their supply chains.
Yeah, and there are local officials working on this right now. As Nick Leiber, in his most recent piece for Bloomberg Business Week, a contributor to the magazine, joins us right now on the phone from Brooklyn, along with Demetria Kasanides, editor at Bloomberg News, joining us on the phone from New York.
So, Demetria, let's start with you. What was it about this story and aspect of small business that kind of piqued your interest?
Well, as with all of what we do, I think it was another line of support and ways to really help small businesses figure out how to tap more resources. And I liked that that the business that we highlight in the beginning of the story is really focused on working with local and regional governments. You know, when you hear about contracting and government contracts, you tend to think federal contracts are the big ones. They probably pay out a lot more, but there is a lot of procurement that's happening on a much more local level, which makes a lot more sense for small businesses in some ways. So it was very appealing for that reason, and it was just compelling to see how much the business had grown that Paula Santana had started a few years ago.
So Nick Leiber, come on in here and tell us a little bit about who Paula Santana is and what she's been able to do.
Paula Santana is an entrepreneur who is very creative, very driven. She started a few businesses. Her first business was a drone logistics business called Matternet, and her second business, the one we're talking about right now, is a really interesting business called Social Glass, which she started back in 2017. And basically the idea is to make it easier for government workers to do their jobs. And she's really focused right now on procurement. She's saying, there are all these government agencies, community colleges, towns, cities. They're all talking, hey, we need to support small business. We should, set up a grant program or set up a way to encourage shoppers to buy from the local businesses. But she's saying, what may make even more sense is if you, dear government officials, buyers, simply bought from some of these businesses. Rather than order your cleaning supplies from big business X, why not order your cleaning supplies from smaller business Y? And that's really what she's trying to do. And it's a tricky kind of marketplace to set up because you have to convince both government buyers to give you the time of day, and you have to convince busy small business owners to give you the time of day. But she's been plugging away in it, and it's starting to really get some traction.
Well, listen, and Nick, it goes back to this idea: money talks, and money makes a difference. And when you're very deliberate and thoughtful about where you're spending your money or where you're allocating your supply chain, whether it's creating more diversity in that supply chain or whether trying to help your local small businesses, this can make a difference.
Right, and cities across the country have been making more and more noises about directing more and more of their dollars to different types of business: locally owned businesses, women-owned businesses, Black-owned businesses, and this marketplace could help them, because not only can you search for, say, cleaning products, but you can also say, and I'm looking for a veteran-owned business that will supply us with cleaning products and laptops. So it gives you this sort of granularity that's kind of exciting. I mean, it's as exciting as government procurement could be, but it, it's pretty powerful.
Well, I did learn in your story, Nick, that there is such thing as a master's degree in government procurement law. I had no idea that existed. So there are a lot of people who do find it very interesting. And this story is...
deal. It's hundreds of millions of dollars.
Yeah, the story is...
governments in the U.S. are spending hundreds of millions of dollars at the state and local level on this stuff. So it's, it's a lot of money, and it's a science, it's an art, it's all of the above.
The small businesses are there. Again, what Nick has highlighted is that they exist. The businesses exist, but sometimes it's very hard to find the business. And she's been really smart in setting something up that's going to connect the procurement officers to precisely the type of products and businesses that they need. It's not that those businesses aren't out there. They're out there, and they're ready to take these contracts on also. When you need to source stuff, sometimes it makes a lot more sense to do it locally in terms of timelines and deliveries and availability of inventory and all that kind of stuff. So it should make a meaningful difference.
That's a really good point, Dimitra, that it exists. It's just a case of often either the infrastructure isn't in place or people don't even think about it or know to kind of look more locally. One last question, Nick. In terms of governments, are they thinking more about this or making mandates to do just that, to say to, governments, you've got to buy locally?
Yeah, that's something that that's definitely been happening. It's been happening because of pressure saying, hey, you're really not buying enough from local businesses or from Black-owned businesses. Let's put something in place to try to make it happen. So there's been goal setting in Boston, in Philadelphia, in Virginia, in different places to try to do exactly that, which in theory should help these smaller businesses.
Yeah, out of times of crisis, right? People are figuring out things to maybe improve the system, and certainly when it comes to small business and local business. Hey, guys, thank you so much. Nick Leiber, contributor at Bloomberg Business Week, on the phone from Brooklyn. Dimitra Kasanides, editor at Bloomberg News. And check out more stories from the Small Business Survival Guide. You can find that at Bloomberg.com.
It seems like a no-brainer for local politicians, right? Support the communities that you govern over.
Right. Right.
It makes total sense.
Just think about the benefits as a result of it. All right. You are listening to Bloomberg Business Week. It's Tuesday, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I wonder if we're going to get some Tay-Tay today.
Ooh, I doubt it. We're not. I doubt it.
Billie Eilish, maybe?
Maybe. I think we got our taste of the Grammys yesterday. I think we're going to get a little discussion of value versus growth. Maybe?
See if there's a garage band with value in it. All right, Dave Wilson's coming up with his chart of the day. In the meantime, 29 minutes to go, and that means we're headed to Charlie Pellet.
Hi, thank you very much. And here's what's going on. I'm looking at a mixed picture on the wall on the Bloomberg right now, with the S&P 500 index lower now by 3 points. Lower, little change, down less than 0.1%. The Dow is down 108, lower by 0.3%. NASDAQ up 23, up by 0.2%. The NASDAQ 100 index, full of tech names, up by 0.6%. 10-year yield 1.61% right now. Stocks turn mostly lower as yields on benchmark Treasury notes edge higher, while investors weighed the strength of the global economic recovery. S&P dropping from records, turning lower for the first time in 7 trading sessions amid a drop in the energy and industrial sectors. West Texas Intermediate crude down 1.1%, 64.70 a barrel, and gold is little changed, up 24 cents the ounce of $17.32. Again, 10-year yield 1.61%. Connecticut Governor Ned Lamont says his state is tentatively planning for COVID-19 vaccine eligibility to expand to all adults over the age of 16 by April 5th. But as vaccines get rolled out across the country, a question that was raised this morning on Bloomberg Television and Radio by our Jonathan Farrell was, why have smokers in certain states gotten priority in getting shots? Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
You have to remember that the vaccine is about really decreasing the pressure on hospitals by vaccinating high-risk individuals. So when we look at this as a public health problem, they were trying to say, how can we stretch this vaccine supply the best so that our hospitals never get in trouble? So if you're a smoker, you're more likely to be hospitalized. So it's not any kind of personal approval of your behavior. It's just your behavior puts you at risk for severe disease. We're worried about hospital capacities. We're worried about ICU beds. So we're going to give you a vaccine so hospitals don't have to worry about you. That's how I put that.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we're following today, Moderna now up by 6.2%. Pfizer shares, they are higher by 1%. BioNTech is trading lower by 0.4%. Johnson & Johnson up 0.6%. AstraZeneca remaining higher now by 2.5%. Again, recapping, turning out to be a mixed Tuesday. S&P just turning positive once again, up now by 0.5 point. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
NFT, for your vanity. Computers never sleep.
Wow. Is it? Did that say NFT? I thought that said NFT. NFT, computers never sleep.
There's a song about NFTs for your vanity. Oh, wait, is this Elon Musk's thing?
It is.
Oh.
This is the one he's selling, right?
Yeah.
I'm embarrassed that I didn't get that. You know, I saw the video. Yeah.
The first thing you see is a video with that song attached. And, the tweet says, I'm selling this song about NFTs as an NFT. That would be a non-fungible token, by the way. They're all the rage in the digital art world and elsewhere.
I'm tweeting at Elon right now saying, hey, Elon, did you know you are the chart of the day?
Good pick, Dave, because I saw the tweet. I just didn't listen to the music. I didn't, I should have. Good one.
Well, there you go.
All right, so
Besides, today's chart really didn't lend itself, at least in my mind, to an obvious musical choice, because it's all about purity. And there's not a lot of purity in the kind of music that I tend to listen to, but I digress. what we're talking about here is, the whole idea of value stocks. I mean, that's a focus for Keith Lerner, who's the chief market strategist at Truist Wealth. But he's kind of going beyond just the basic growth versus value comparison that you were talking about earlier, and looking within value stocks to find what's called pure value. In fact, there's an S&P index that it's called the S&P 500 Pure Value Index, and there's an exchange-traded fund tied into that. And the whole idea is, rather than just taking the entire S&P 500, splitting them up between growth and value, and in some cases including companies in both, because they don't really fit into either one so well, is to look at the companies that are best defined as value when you look at earnings or sales or asset values, and then focusing on those. So it's a relatively small number within the broader S&P 500. And so what Lerner did is he took that and looked at the industry group composition and then compared that with the Russell 1000 Value Index, which is another fairly popular gauge of value stocks. And when you run the numbers, you find out that the two best performing industry groups in the S&P 500 this year, financials and energy, together they account for more than half of the S&P 500 Pure Value Index. You do the same computing with the Russell 1000 value, they only add up to 26%. So you get a lot more bang for your buck, so to speak, if you focus on pure value. So he's suggesting that investors would want to do that to the extent that they are focusing on the value stocks. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
You're right. I'm Googling pure value songs. Nothing coming up, Dave.
Yeah, exactly.
I thought you were throwing us a curveball and you were going to talk about NFTs, also known as Nifties.
No, Nifties. There actually is a benchmark index. If you go to India,
yeah,
the Nifty is a benchmark stock index there.
Oh.
You can look it up.
Well, that's what people are calling
On your
NFTs
Bloomberg
now.
terminal.
Look at that.
You're right.
That's what people are calling NFTs now.
Nifties?
Yeah, Nifties.
NFTs. I still got to get my head around that.
I got to get my head around the idea that one of them could be worth $69 million.
Right, is that the art?
That was the piece of
we
art
talked
from
about this.
Bloopy. Oh, no, I'm
Who is
forgetting his
it?
name.
Oh, yeah.
Beeple.
Beeple.
I started following him on Instagram this weekend.
Hi,
He does
people.
a
No,
piece
we
every
haven't-
day.
Do you? Yeah.
Yeah, digital art. Today's was Elon Musk, or yesterday's was Elon Musk.
It's
It all
just-
comes together.
It does.
I actually put out on my Twitter feed, Andrea Felstead, who writes for Bloomberg Opinion, kind of looked at what's happened in the art market, in part because of this demand for the NFTs. And it's broader than that, but in any case, it may well be worth reading. Botticelli or Beeple, the art world needs both.
I'm just thinking somebody who's been asleep for the last year, and then all of a sudden we're talking about this, or the last 10 years, they're like, what are they talking about?
People.
All right, and Nifties, NFTs. Dave Wilson will be back later on. All right, off to World of National News and off to Nancy Lyons. Hey, Nance.
Hey, Carol. The European Union's drug regulator is insisting there is no indication the AstraZeneca vaccine causes blood clots, even though some countries have suspended the use of that vaccine due to those concerns. Emer Cook is executive director of the European Medicines Agency.
We are still firmly convinced that the benefits of the AstraZeneca vaccine in preventing COVID-19 with its associated risk of hospitalization and death outweigh the risk of these side effects.
Experts are undertaking what they describe as a very rigorous analysis and will make a recommendation on Thursday. Moderna today is also in the news for beginning trials of its vaccine on children. The two-part study will look at 3 dose levels in the youngest children, 2 dose levels in older kids in this first phase. President Biden is in Chester, Pennsylvania this afternoon, the first stop on his Help Is Here tour to promote the recently passed American Rescue Plan. He's visiting small businesses that have been impacted by the pandemic. He'll head off to Georgia later in the week. Well, the president is already looking ahead to his next big economic package. Bloomberg Government's Emily Wilkins reports it's set off a debate among Republicans over the return of earmarks.
They need to decide
Are they going to stay away from this particular area that has had fraud in the past? Or are they going to embrace this as a mechanism for them to bring home funding that could help their districts and their constituents?
The earmarks also have a reputation for waste, fraud, and abuse. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, folks, it is the year of Reddit mania, of GameStop mania. Mania. I was going to say meme mania. Listen, one of the most read stories, I think it is the most read story on the Bloomberg right now, has to do with Bill Gross and GameStop.
Yeah, he said he's made $10 million, not billion, $10 million betting against GameStop. The co-founder of PIMCO said he's still selling GameStop options, betting against certain parts of the bond market as well. He said in an interview on Bloomberg TV today that he made about $10 million betting against the video game retailer's share, but the trades did not go off without a hitch. He said he got in too early. He was in the hole by about $10 million. He stuck with it and sold at a profit.
It is wild, right? And as we said, or as you were saying, he's still in it, selling options at $250 and $300. He says, I think this is the perfect opportunity for option sellers, not buyers, to take advantage. All right, so that's one story we have out there. Then we have another story about the New York Stock Exchange chairman saying GameStop surge highlights the U.S. market flaws. So some concerns specifically. We're talking about Jeff Sprecher. He is the chief executive officer of Intercontinental Exchange, chairman of the New York Stock Exchange. He said this year's run-up in the shares of GameStop highlighting, quote, again, some of the inherent flaws in the U.S. equity market. He says you're definitely seeing, though, the democratization of markets without elaborating on what flaws he was referring to. Dun, dun, dun.
And
yes,
viewers, at least in the imagination of Hollywood executives, cannot get enough of the saga. They repeatedly, we do see these stories at the top of the Bloomberg terminal, and
Totally.
it does show that there is a story happening here. Of course, Hollywood talent agencies in recent years have looked to YouTube, TikTok, and now they're looking to Reddit. So writes Lucas Shaw at Bloomberg News. The founder of Wall Street's Bets, Jamie Roganiski, has signed with UTA, that's United Talent Agency. Seth Rogen, Kevin Hart are other clients there as well.
Really just looking to capitalize on his fame from founding a forum on the site Reddit. We know this is something we've talked about, but listen, as you said, can't get enough of it. Who knows if a series is coming to what?
There have been at least 9 projects connected to it. One comes out soon, in a couple days.
All right, we'll probably have more details on that. Stay tuned.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We've got stocks mostly lower, both the Dow and the S&P retreating from records. NASDAQ is advancing higher now by 30 points, up by 0.2%. The NASDAQ 100 index, full of technology names, up now by 0.7%. S&P dropping from a record, turning lower for the first time in 7 trading sessions amid a decline in the energy and industrial sectors. Treasury notes edged higher as investors weigh the strength of the global economic recovery. Right now, we've got the benchmark 10-year, the yield there 1.61%. Gold, little changed, virtually flat now, up 2 cents, $17.31 the ounce. West Texas Intermediate crude down 1%, $64.72 a barrel. So again, the S&P down 2 points, down about 0.1%. The Dow down 103, down 0.3. NASDAQ up by 0.2%. And this headline from the Bloomberg Professional Service, JetBlue is moving New York City jobs to Florida. This according to a report in the New York Post. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And that's a pretty big deal. All right, Charlie, thank you so much. Well, it's been a little over a year since the COVID-19 pandemic disrupted our lives. Every day at this time, we are taking a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's John Tucker.
If you tried to buy something as mundane as toilet paper during the pandemic, you saw it. Supply chain disruptions and demand added up to shortages. The same thing happened with bicycles. People clamored for an outdoor activity during lockdown. Rob Martinetti, co-owner of a bike shop in Shrewsbury, New Jersey, was inundated with customers.
It went right through the roof. I mean, it was like instantly business doubled to whatever it normally would have been.
His store just wasn't big enough. He ordered whatever inventory he could and scrambled to find storage space. Still, he could barely meet the demand. The suppliers just weren't supplying like they used to.
So we thought we were pretty far ahead of the curve, which we were to some extent, but that actually didn't last us nearly as long as we thought.
Lesson learned, have enough inventory on hand and have the contacts in place if that inventory suddenly dries up. Those are just some of the ways small retailers experienced dramatic change in a year like no other. I'm John Tucker, Bloomberg Radio.
I'm driving in my car, I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session, bouncing around, as Charlie mentioned, a little bit, call it flat on the S&P, a little bit lower, Dow down about 96 points, NASDAQ up 28. Great to have back with us is Vinny Catalano. He is Chief Market Strategist at Stuyvesant Capital Management. He's joining us on the phone from New Jersey. Vinny, nice to have you back. How are you?
I'm doing well. How are you?
Doing okay. Hanging in there. Looking forward to a second half of the year. Have you gotten a vaccine?
I have. Actually, I have, and the second shot did have an effect, a little bit more than the first one did, and Benadryl is pretty amazing.
That is so true. That is so true. All right, and there's a couple trading days that we've certainly had already this year that maybe a little Benadryl might have been needed just to take us out of our misery. How do you see the market trade right now?
Well, the market is clearly overvalued by any traditional method. And that's kind of what I thought we might explore a little bit.
Sure.
You know, what happened to fair value? What happened to assets being valued on the basis of their future cash flows and discounted back to the present value and all of that? And, you know, a lot of investors, if you don't have some kind of an anchor in which you can look at and say, okay, this is where stocks generally ought to be trading at, and you can use PE ratios for something like that, well, then what do you have? I mean, things are unmoored and unhinged and unanchored, and it's difficult. So what do you do in that kind of environment? And that's sort of the thing that I thought maybe we might explore a little bit.
So when did this happen in this cycle?
Well, a cycle really started, let's say, going back to, and it's done this repeatedly in the past, it goes back to from the great financial crisis and the flood of money that came after that. And every time the Fed tried to do something during QE to infinity, the market threw a tantrum. And with that, enough investors felt that they were backstopped by the central bank, not just here in the United States, but throughout the world. And it just accelerated, and it became more and more and more so, until the point where now we have financial engineering on top of risk on top of greater risk in general, and it's just expanded out to the point where you were just talking a little bit a while ago about Nifties and NFTs and all of that sort of thing, and it's just the movie No Country for Old Men is apt for the environment we're in. This is no country for anyone who doesn't get the transformed nature of the way things are today.
But wait, transformation and innovation and disruption can be a good thing, Vinny. So what is it specifically that, because I do feel like there's SPACs, there's NFTs, there's a lot of things going on. There's the meme stocks, and then there's the rest of the market where, we're seeing a trade where increasingly, or someone, whether you believe it or, whether you like what she's doing or not, there's a Kathy Wood that really is looking at a company's business and doing the research and thinking about what the company is, down the road. So, help me out a little bit, dig a little bit deeper for me.
Okay, creative destruction is a good thing. Not for the companies that are being destroyed or the markets that are being destroyed, but it is generally a good thing, and it's part of the necessary process of capitalism in its evolutionary stage. The problem that many investors, I believe, have is that you're looking for some kind of benchmark from which to work. So it isn't just a car company selling at 1,600 times earnings that's an issue, or a stock that is basically the company is defunct and their stores are not selling a whole heck of a lot, and the stock is valued at $1 to $5 a share by traditional methods, and it's selling for $200, $300 a share. I mean, those kind of things. It's not isolated to that. It's a broad, wide spectrum. And the difficulty for investors is how do you manage a portfolio that engages in that kind of behavior when everything is kind of up for grabs. So a big element of it, like I just mentioned, a big element of this is the fact that the stock market, unlike the private equity market and the private markets in general, the stock market has one feature that the other markets don't have, and that is liquidity. Easy in, easy out. And if you can get in and you can get out very easily, then why not? If there's an excess amount of capital floating around, anything goes.
I guess the question is, and we only have about 30 seconds left, excuse me, is how do you talked about the challenges of portfolio construction in an environment like this. I mean, what are you doing?
Sound investment principles in general, manage your portfolio according to percentages. And if you want to put a certain amount of money in something that you want to take a shot, do it, but do it with less than 10% of your money. And an example of that would be, for a trend that might develop into something more substantial for a quality company.
Right.
Look at a stock like Volkswagen.
All right, yeah, which we talked about earlier. Hey, listen, Vinny, we got to run. Vinny Catalano, he is Chief Market Strategist at Stuyvesant Capital Management, with us on the phone in New Jersey. All right, folks, just about 3.5 minutes left in today's trading day. We'll count you down to the closing bell. Have those closing numbers right here on Bloomberg Business Week. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Mixed Tuesday, folks from Cameco ringing that closing bell. S&P lower for the first time in 7 trading sessions amid a drop in the energy and industrial sectors. Dow also retreating from a record. The Dow Jones Industrial Average down 128 points, down 0.4%. S&P at the close lower by 6. That was a drop of about 0.2%. Nasdaq higher by 11, a gain of 0.1%. The Nasdaq 100 index up today by 0.5%. A retreat for the Russell 2000, down 1.7%. 10-year yield 1.61%, and gold higher a little change now, up 50 cents the ounce to $17.32. West Texas Intermediate crude down 1.1%, 64.65 for a barrel of WTI. Well, as for markets and the earnings environment, Dan Morris is Senior Investment Strategist at BNP Paribas Asset Management.
What we're hoping, and the market certainly seems to be counting on this time, is that going into this period where we're going to have a big surge in demand with constrained supply, that companies will be able to pass along at least some of those cost increases. So that really should translate into the revenue growth that we're going to need to see for the market to continue to rise.
Kathy Wood is giving more fuel to the rally in Lending Club shares. The stock higher for a 6-day, its biggest climb since going public almost 7 years ago, after Wood's ARC Investment Management reported increasing its stake in the online lending company Lending Club up today by 4.9%. Among some of the recent high-flying names popular with Reddit retail investors, GameStop shares today, they did decline by 5.4%. AMC Entertainment down 7.3%. Costs lower by 7.6%. We are awaiting the latest numbers out of CrowdStrike Holdings. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, everybody. Charlie breaking down those closing numbers on this Tuesday trade. Quick check on the S&P 500. 153 names in the index higher today, 348 lower, 4 unchanged. I mean, overwhelmingly, the day was, kind of a risk-off trade today.
Yeah, that's what we're seeing as we take a deeper dive into the S&P 500. Energy, the big laggard today, down 2.8%. Industrials lower as well, down by 1.4%. Financials down by 1.13%. Materials down by 0.9%. There were 4 of the Bloomberg industry groups in the green today. Communication services higher by 0.9%. IT, information technology, higher by 0.8. Utilities, barely nudging out 0.1% there. And consumer staples, pretty much flat, but in the green.
All right, so let's bring in Bloomberg News cross-asset reporter Katie Greifeld with what she has been focusing on. And we have to not forget, right? I mean, we kicked off our show this way. Tim and I did with Mike McKee, reminding everybody, Katie, that the beginning of a 2-day Fed meeting, we'll get a Fed decision tomorrow.
Absolutely. And I mean, we pretty much know what Powell is going to say, what he's going to do. You can expect to see interest rates not budge at all. They're probably going to reiterate that, they're not even thinking about raising rates. But this one is kind of interesting because we are going to get an update on their summary of economic projections. So we'll get some actual numbers to dig into. So that's a bit interesting. But until we get that, I mean, today really felt like we were just in a wait-and-see mode across asset classes. I mean, if you look at the trading ranges, they're pretty tight, and also volume says the same story. I mean, if you look at the S&P, the NASDAQ composite, 30-day trading volume, we were below average. So again, just sort of, no one really wants to make a move now the day before we get that Fed decision.
So even though most people know what Fed Chair Jerome Powell is going to say, they are still waiting because there could be some sort of surprise?
There could be. We will get some numbers. And also, I mean, you can expect Powell to get a lot of questions on inflation and employment and, when they might think about tapering that QE program that they've been running. And Powell has done a pretty good job of not saying too much, but still, I mean, every word that he speaks is going to be heavily parsed.
Yeah, exactly. Well, what would be the question you would ask him?
That is a great question. I guess I would ask, I mean, what if you're in a situation where employment is back to the unemployment rate is back to 4% at the end of this year. You have GDP growth. I mean, Goldman made waves this month saying that, we could see 8% quarter over quarter growth. If you're in that situation, what is the basis for continuing to buy, billions and billions of dollars worth of bonds every month? So I would expect for him to get questions about that. At what point, will that average inflation targeting regime that they're trying to stick to be tested?
Katie, what about inflation? Where's the debate happening right now?
Oh, man, it's happening everywhere. Everyone has a take on inflation right now. I mean, just looking at the Bloomberg terminal today, we have the Bridgewater co-CIO weighing in, saying that he sees inflation forcing the Fed into action. Then you have Guggenheim on the other side, Scott Minerd, saying that these inflation fears are due for a reality check. So, I mean, right now it feels like the Bridgewater view is winning out a bit. You do have break-even inflation rates on a 5-year basis. They're at their highest level since 2008, and you do see some pricing start to come into the euro-dollar market. We actually have a full Fed hike priced in by the end of 2023. So it does feel like the market thinks the Fed is going to have to move maybe sooner than they expected, but don't fight the Fed. It's a mantra for a reason.
Well, and you do wonder if, Fed officials are all right, traders, markets, go ahead, do my job for me, right? If you talk about how much is already priced in, that could be happening.
Yeah, you don't need a hike from the Fed to see long-end interest rates rise and for the yield curve to steepen. So
yeah. So hey, what do you make of the retail sales numbers? It's something we talked about with Mike too. A big disappointment, although the prior month was revised upward.
Absolutely. Yeah, it's a weird number. I mean, we were expecting to see retail sales contract, not to the extent that they did. They actually contracted by 3%. So that's an ugly number, but pretty much every economist would tell you to ignore it. February, we had some bad weather. That can have an effect. And also the trade across markets, across every asset class, has been that the boom is coming. It's not going to happen in February. It's going to happen in 3 to 6 months. So it feels like, at least the analysts I'm talking to are eager to write this off. But again, you are seeing a bit of a risk-off tone go through markets. And when you get an ugly retail sales number like that, it's hard to ignore.
But we didn't fall apart. I will say that.
Thankfully, no.
Katie Greifeld, thank you so much. She's Bloomberg News cross-asset reporter. This is Bloomberg.
All right, Dave, you're up. Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Mr. Wilson, give us your stock of the day.
Optimize RX, Tim. The company runs a digital network that allows drug makers, health insurers, and other healthcare organizations to communicate with doctors and their patients. Optimize RX was founded in 2006 and went public in 2008 by merging with a shell company. The shares were traded in the over-the-counter market until the company moved to NASDAQ in 2018. The ticker is OPRX. 1 year ago today, Optimize RX dropped to its lowest price since going to NASDAQ. The shares then climbed about tenfold in the next 11 months before giving back some of their gains. Now Optimize RX is rising again, and the rally accelerated today after the company released a business update. They said they signed 19 new enterprise-level deals this year. That's out of 46 in progress at the end of last year. The company added that it expects contract renewals to exceed the rate for 2020, which was 86%. Optimize RX's shares responded with their biggest gain in almost a year. At one point, they were up almost 25%. They closed with a gain of more than 15%.
It helps if I push the button. The stock has been on a tear, Dave.
It has.
Yeah, I'm just looking at it.
It's
It's interesting.
pulled back in the last few weeks, and now it's rallying anew.
Yeah.
You said shell company. Was that a SPAC? A precursor to a
that's
SPAC?
sort of like a predecessor of a
Okay.
SPAC. Company that it's still on a stock listing, but no real business, and a merger. I mean, it's same effect as a SPAC, really.
Yeah, interesting. Good stuff. Up about 68%, almost 69% so far this year. All right, let's get over to Nancy Lyons.
Hey, Nance.
Hey, Carol and Tim. President Biden is spending the afternoon in Chester, Pennsylvania, visiting small businesses and touting the new COVID relief package. Here he is at Smith Flooring, a minority-owned business.
I think you should be aware more help is on the way for real. You have questions for me?
Democrats may have passed the American Rescue Plan by a thin margin in the Senate, but lawmakers had to use a process called budget reconciliation to do it. For other legislative priorities, that will not be possible since the filibuster rule requires 60 votes for passage. Some Democrats favor getting rid of that rule, but Senate Minority Leader Mitch McConnell says that would be a mistake.
This chaos would not open up an express lane to liberal change. It would not open up an express lane for the Biden presidency to speed into the history books. The Senate would be more like a 100-car pileup. Nothing moving.
Democrats are considering using budget reconciliation again to pass tax increases that would cover the cost of an infrastructure plan. Well, senators today confirmed Isabel Guzman to serve as administrator of the Small Business Administration. That vote was 81-17. A newly unclassified report from the U.S. intelligence community concludes with high confidence that no foreign actors changed votes or otherwise disrupted the voting process in the 2020 election. The report affirms the integrity of the contest won by Joe Biden. U.S. officials say they did track a broader array of foreign countries who took steps to influence the election than in past cycles. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right. Yes, this is a story in the Wall Street Journal, but I've been living this.
I was going to say, for some parents and for some students, 'tis the season.
I have a senior in high school, and we've been going through the college application process. And this story by Dow Jones, Wall Street Journal, says college admission season is crazier than ever. That could change who gets in. The reason it's crazier is that this time around, kids didn't have to submit their SAT or ACT test scores. So what happened was, as a result, the application numbers just skyrocketed at schools because kids were like, okay, maybe I'll apply to schools I wouldn't have normally because my scores weren't that good.
Okay, so let's talk about some of these numbers. Little university called Harvard received more than 57,000 freshman applications for the entering class next fall. That represents a 42% increase over last year. Yale, Stanford, Columbia, they were so overwhelmed, according to the Journal, that they actually pushed back the date to announce their admissions decisions.
Yeah, exactly. This is what we've seen, like you would normally expect to be hearing, and they've all pushed it off a couple of weeks. So it's interesting. And you do wonder whether or not this is going to change longer term, because there's been a lot of discussions, and probably rightfully so, that, these test scores, which used to be kind of thought as like an equalizer, right? Everybody takes the test. Well, we now know people who are more fortunate or better school systems or have the money where they can hire tutors and they can actually study for these tests or do practice tests, have an advantage.
Yeah, no question. And the debate continues about to what extent universities and colleges should consider them. And even in graduate programs, some graduate universities have dropped use of those. Some law schools, for example, no longer requiring the LSAT. I think the big question, too, this article, after reading this article I have, is what does education look like on the other side of the pandemic?
Yeah.
We are seeing, a rise in remote learning during the pandemic. To what extent does that stick? Because they still have to convince parents and students to pay so much money for college. Are you going to do that if it's remote?
Right, and isn't part of the experience kind of being on your own in another setting. So anyway, a great story, and I'm living it. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. CrowdStrike is forecasting revenue for the first quarter, and its guidance beat the average analyst estimate. Shares up now by about 4%. CrowdStrike is a cybersecurity company. Cooper Software's fourth quarter revenue came in at $163.5 million. Estimates were for $146 million. Shares up now by 6.7%. JetBlue exploring its office options after the pandemic and may ship more corporate jobs to Florida from New York City. This, according to the New York Post, citing a March 11th memo that the company sent to its staffers in the Long Island City area. Today, we had stocks falling for the first time in 6 trading sessions. Yields on benchmark Treasury notes lingering close to a more than one-year high. 10-year yield 1.62%. S&P fell 6. Falling back from a record, down about 0.2%. The Dow also retreating from a record, down 127, down 0.4%. NASDAQ up 11, a gain of 0.1%. Gold, little changed, up 40 cents the ounce at $17.32. And West Texas Intermediate crude down 1.1%, $64.68 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. So let's get to a story. It is, Tim, among our most read on the Bloomberg. It's about the black bankers that have a seat at the table and are really reshaping Wall Street. It's a list of individuals.
I should turn my microphone on, right?
It's one of those days. Yeah. So let's get to this story by Linan Nguyen. She is finance reporter at Bloomberg News. She joins us on the phone in New York City. Linan, this is a great piece of reporting that you and Michelle Davis of Bloomberg News did. So tell us what you set out to do.
So what we set out to do was to find interesting people from the Black community who are at banks. And we know that there are senior people out there, and we just wanted to make sure that we were making an adequate effort to find them and tell their stories. And it wasn't that hard to do, actually, Carol. We started speaking to people in our networks. We asked around, we asked our fellow reporters on the team, and we also asked the banks to identify people that they thought were real superstars, and this is the list that we came up with.
Okay, so one of those people who, according to the people you spoke to, is one of those superstars is Harold Butler, a managing director at Citigroup's Public Sector Group. Tell us about Harold.
So Harold is really interesting. He manages Citi's work with the U.S. government, so that includes sort of facing the Treasury Department and the Federal Reserve. But what he calls his second job is running a program where Citigroup actually mentors Black-owned banks. So it kind of teaches them the ropes, helps them to learn about deal making, and then enables them to sort of be its mentor or its protege in programs that are bigger and gets them in on bigger commercial deals. So eventually the idea is these protege banks are going to be able to sort of get the adequate experience to be able to get bigger business like government contracts. And the thing that's also interesting about Harold is he's got a lot of flair. He sometimes wears a cowboy hat to Citigroup's office. So you can imagine he cuts a pretty interesting figure, and he's very sort of colorful character.
Definitely. I love that. And talk to us about what I would safe to say in terms of describing her is a fierce figure. She is the head of home lending at Wells Fargo and kind of went head-to-head with the CEO, Charlie Scharf.
Yeah, that's right. So Christy Furco is the head of home lending, and she, 30 days into her new job at the bank, there was this news story that broke about Charlie Scharf making a comment about a limited pool of Black talent at senior levels in the industry. Obviously, that caused a huge stir and a very big backlash. And Christy was very blunt. She called him to discuss it. She said, I have a problem with this. And, in fact, she kind of gave Charlie Scharf credit for owning this mistake. And what she told me was that this backlash against Wells Fargo for that comment has really focused minds within the bank and got people focused on re-earning the trust of that community. So in some ways, that big mistake has actually helped the bank to really confront this issue head on. And one of the fun things about Christy's background is she was a high jump champion in college.
Nice. Awesome. Linan, one thing that I'm wondering about, and you mentioned this in your piece, you talk about that there are 9 Black executives, up from just 2 when George Floyd was killed last May. That's among 120 people at the 6 biggest banks' management committees. I'm wondering how that's changed. Obviously, it's changed in terms of who they're hiring and who they're promoting. But I'm wondering what else banks have done when it comes to address racial inequities, not just inside the bank, but also when it comes to their lending practices, when it comes to outside the bank and the way that they work with customers.
So, Tim, that is a key question, right? So, first of all, in those smaller groups of people, right, those management committees, it's significant, obviously, that we have, 9 people versus 2 people in the industry, but still, that's a very small cohort of people. On top of which, you've had the banks really pledge to increase their hiring and recruitment and retention of Black employees to become more representative of the U.S. community. We still don't have enough data to see whether that needle has moved yet, so that's still an open question. On top of which, banks have talked about sort of doing more in Black communities, so they are funding a lot of philanthropic and business efforts in order to try and address racial inequities, whether that's equity investments in Black-owned banks or in smaller kind of investment funds that are geared towards the Black community. But these are long-term efforts, so it's going to be really hard for us to really understand how these efforts are moving the needle, how they are narrowing the racial wealth gap in this country.
So moving the needle, but safe to say, Linan, that all of these individuals would say, listen, we still have a long way to go to reach anything close to parity.
Yeah, I think many of these individuals would say that this is a watershed moment in terms of the amount of attention and acknowledgement about sort of racial strife in this country and the lack of diversity in the industry. So many of them were very optimistic and hopeful that there's a new sense of consciousness and wanting to tackle this issue. But there is still very much a long way to go. And, a lot of that comes from them being representatives of their community within these banks, showing junior staff that there is a path to a more senior role, recruiting and retaining, diverse talent.
Yeah, we only have about 40 seconds left, Linan, but let's talk the recruiting element here. What are these banks doing in order to recruit and address what Scharf's comment, right? Where he talked about this limited pool that he got a big pushback at.
Yeah, and I think part of it is identifying people and looking for people and, asking the right people, because I didn't find it that hard to really identify some very interesting executives in this industry, but also making sure that the environment is such that people who come from different perspectives have their perspectives respected and valued as, people who can drive innovation in this business.
Right. Widening out your pools. That's what everybody says. You can't keep going to the same buckets for employees and expect to get a different outcome. Linan, great reporting as always. Linan Nguyen, she's finance reporter at Bloomberg News, with us on the phone in New York City. You are listening to Bloomberg Business Week. We're heading to Dublin in just a moment. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so we did mention at the top of the show that it is St. Patty's Day Eve.
It is.
It is.
Even though
indeed.
everything feels like it's kind of,
just
at
another
least that's for
day.
me in New York. It could be different for people in other parts of the country.
Yeah,
around
exactly.
the world, of course.
I know. Where's it? Chicago, where they do the green water? I love that. All right, anyway, we're going to talk about the economic story of Ireland in just a moment with a favorite guest and one who checks in with us every year. All right, first up, back to Charlie Pellet.
Hi, thank you very much. Let's talk about after hours. Green Lennar, the home builder, out with revenue for the first quarter that beat the average analyst estimate. Lennar shares, ticker LEN, up right now by 1.4%. Also reporting after the close of trading, CrowdStrike. It's out with fourth quarter results. First quarter revenue forecast did beat estimates. Shares up now by 1%. CrowdStrike is a cybersecurity company. Stocks lower for the first time in 6 trading sessions. Yields on benchmark Treasury notes lingering close to more than one-year highs as investors weighed the strength of the global economic recovery. S&P lower after setting records for 3 consecutive trading sessions, led by declines in the energy and industrial sectors. S&P down 6 today, again retreating from a record, down by about 0.2%. The Dow down 127, lower by 0.4%. NASDAQ advanced 11 points, up by about 0.1%. And today we saw the NASDAQ 100 index up by 0.5%. 10-year yield 1.62%. Now, as for the overall market backdrop, Matt Maley is chief market strategist at Miller Tabak.
It's going to be hard for the stock market to rally a lot more unless that NASDAQ, the tech-heavy NASDAQ, sees plays catch-up in a big way. Because even when the rest of the market's doing well, history tells us that if the tech group is doing poorly, the rest of the market has a tough time rallying and continuing to rally in a strong way.
Retail sales dropped in February, the 4th loss in 5 months. Severe winter weather in Texas and other states kept consumers at home and shuttered retailers. Among some of the retail names, some of the big retailers, Walmart lower today by less than 0.1%. Target down 0.5%. Macy's down 3%. Kohl's stores lower by 2.5%. Amazon up 0.3%. Recapping stocks mix, the S&P down 6, a drop of 0.2%. Gold, little change, down 14 cents, $17.31 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate the update. So, okay, at one point in January, Ireland had the fastest and highest spike in coronavirus cases in the world. That was followed by one of the most stringent lockdowns in Europe. And they are also among the European nations that have temporarily halted the use of the AstraZeneca COVID-19 vaccine. So we want to kind of start there with our next guest. So great to check in once again with Martin Shanahan back with us. He's the CEO at IDA Ireland. It's Ireland's government agency responsible for attracting and the development of foreign direct investment into that country. He joins us on the phone in Dublin, where it's, about 8:30 at night?
That's correct, Carol. Yeah, I would obviously much rather be with you in studio as I normally am this time of year, but unfortunately circumstances don't allow for it.
Well, we would much prefer to have you here as well and look forward to when we can do that again. So, Martin, tell me how you've been. Talk to us, first of all, about the pandemic's impact on Ireland and where you guys are in the health crisis.
Yeah, I suppose like all countries, it's been a very difficult year for countries, for citizens, and indeed for companies. But I think we are getting through this. As you mentioned in your introduction, we've had a difficult January, February, but we have seen infection rates fall, hospitalizations fall, thankfully deaths fall. And like all other countries, we are rolling out our vaccine program at the moment. So we are still in a reasonably high level of restriction, but we're hoping come the next number of weeks that we will be able to start to unwind some of those. We've seen school children start to go back to school. So slowly but surely we're getting back, and we are getting the most vulnerable vaccinated at the moment. And we hope that to be able to extend that program over the coming months. Obviously, availability of vaccines is really what's limiting us at the moment. So it's supply rather than anything else.
Yeah, I'm looking at the Bloomberg vaccine tracker right now, and it shows that 9% of the population in Ireland have received at least one shot of the COVID vaccine, and 3.3% of the population is at this point fully vaccinated. I mean, just anecdotally speaking, how do you feel like it's going? Are you starting to hear of more and more people and know more people who are getting vaccinated? That's how it started for us here.
Yes, I think we are, Tim, and I'm quite close to this as well. So maybe I hear a lot about this every day. But I think we are slightly ahead of the European average in terms of the numbers vaccinated at this point. But undoubtedly, Europe is behind, I think, the US and indeed the UK and Israel in terms of the numbers that are vaccinated. And but certainly, undoubtedly, we are seeing the effect. And where people have been vaccinated, and again, like other countries, we've started with the most vulnerable, elderly, those with serious medical conditions, and we have seen the vaccine is working. So I think there's renewed hope everywhere because of the advent of new therapies and indeed the options we have now around vaccines.
Yeah, the Bloomberg vaccine tracker says that the EU has a 7.7% of the entire population with one dose. So I am wondering how you're thinking about this when it comes to attracting foreign direct investment. How do you think, does the coronavirus pandemic, is this setting back goals that you had over the last few years majorly in terms of attracting businesses to the country?
No, actually, and I suppose what we've seen in Ireland is a kind of bifurcation, and I think we're not unique in that regard, where we've seen the domestically traded economy, particularly retail, hospitality, also the tourism sector and construction to some extent impacted very heavily. So undoubtedly the pandemic, we have felt it in Ireland. But actually those sectors which are dominated by FDI in Ireland, which are technology, pharmaceuticals, medical devices, international financial services, have proven extraordinarily resilient. And I suppose Ireland has really, over the last number of years, bet on those sectors, really modern sectors that underpin a modern economy, and they have proven really resilient during this period. Both the install base of investment this year, but also for 2020 we only saw a 6% drop in the number of investments that we have had into Ireland, and Ireland is one of the few countries that also posted positive economic GDP growth in 2020, modest at 3.5%, but positive nonetheless. So, and it is foreign direct investment, and those companies, particularly in pharmaceutical and technology firms, that are driving that.
Hey, listen, Martin, sit tight for a second. We just got to do a little bit of news, but we'll come back and talk some more. We're going to come back to Martin Shanahan. He is Chief Executive Officer at IDA Ireland, joining us on the phone in Dublin. And, I'm so glad we're getting kind of another view into what's going on in the world when it comes to COVID, specifically over in Europe.
Look, I got to tell you, it's American bias. It's where we are. We focus on places we live when it comes to the pandemic and the response, and this is no exception.
Yeah, exactly. All right, back to Nancy Lyons for Check on World and National News. She is in D.C. Hey, Nance.
Hey, Carol. President Joe Biden is in the swing state of Pennsylvania to persuade Americans the $1.9 trillion relief measure he signed will help struggling individuals and businesses. His first stop was Chester, just south of Philadelphia. During his trip, it was also announced he'll hold his first press conference on March 25th. FEMA officials say they continue to target marginalized communities for the coronavirus vaccine. Administrator Bob Fenton testified today before a House committee.
In everything we are doing, we are striving to ensure equity. President Biden has made it a cornerstone of this administration's efforts. And FEMA, we established a Civil Rights Advisory Group that is incorporated into all these activities.
Well, as more adults are being vaccinated across the country, Moderna has announced that children have now been given its vaccine in a clinical trial.
Moderna says the kids vaccinated in the Phase 2, Phase 3 trial ranged in age from 6 months to less than 12 years old. The study is eventually expected to enroll approximately 6,750 participants in the U.S. and Canada. It's being conducted in conjunction with the National Institute of Allergy and Infectious Diseases. Kids who receive the vaccine will be followed for a year. For adults, Moderna's vaccine was found to be safe and 94.1% effective at preventing COVID-19. John Tucker, Bloomberg Radio.
The drug regulator for the European Union is defending the AstraZeneca vaccine that many countries have stopped using due to concerns about blood clots. She says the benefits of the vaccine outweigh any risks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic in our Interactive Brokers studio in New York City. Europe moving forward on vaccine passports. Man, there are a lot of kind of moving parts to this and how people feel about it.
Yeah, there are. And look, there is no playbook to this, no matter where you live in the world. And I think, one of the best examples of a country that has tried to navigate a post-vaccination world is Israel. And that's one country that we've talked a lot about when it comes to how things are going in the vaccine. But as far as Europe goes, it hasn't been a great few days for the European Union vaccine rollout. We've followed the news from AstraZeneca, the more than a dozen countries that have suspended the use of it. But the bloc is still trying to unveil plans for a vaccine certificate, this so-called EU COVID card. It's like a digital green certificate. What it's going to do is allow holders to verify which vaccine they've received, as well as show the results of a coronavirus test, and whether they have received or have recovered, from COVID-19.
Well, I do wonder this is going to lead to like scarlet letters, like I have a vaccine, you don't have a vaccine. And this is why it's a complicated topic, these vaccine passports. Like we are looking to figure out, okay, how do we start moving around, beyond, our little worlds? How do you start to cross borders? How do you cross borders in states here? Or how do you do it from country to country? And so this is why people are looking to it, specifically in Europe, where people do cross from country to country often. But there's concerns about are you going to exclude people that have decided not to take the vaccines? Are they excluded from society? And you do think about, on a civil rights level, is there a problem with that?
Right. I think it's much more of an issue for domestically when countries think on a domestic basis than it is for international travel, because to me, there's sort of no difference between a vaccine passport like this and then that yellow card that we always travel with, we're supposed to always travel with, that shows that we have been vaccinated, because there are requirements when you do get to certain countries that you've received certain vaccines, depending on where you're going. Right. I don't see this being any different. I think it does raise some thorny issues when you allow access to certain places within the country that you already live.
There was another Bloomberg opinion piece too, though, that talked about then, do you have people creating fake copies that have had the vaccine so that you can move around? I mean, there's just, like I said, a lot of moving parts. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 index lower today after setting records for 3 consecutive trading sessions, led by declines in the energy and industrial sectors. Stocks down for the first time in 6 trading sessions. Yields on benchmark Treasury notes lingering close to more than 1-year highs as investors weigh the strength of the global economic recovery. 10-year yield 1.61%. S&P down 6, a drop of about 0.2%. The Dow lower by 127, lower by 0.4%. NASDAQ eked out a gain, up 11 points. The composite index up today by 0.1%. NASDAQ 100 index up 0.5%. Russell 2000 tumbled 1.7%. Gold up 32 cents the ounce at $17.31, and West Texas Intermediate crude down 0.6%, $64.97 a barrel. After earnings, Lennar shares, they are up now by 1.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to Martin Shanahan, still with us, CEO at IDA Ireland, and still with us on the phone in Dublin. Hey, Martin, we were just talking about a story on the Bloomberg about how Europe is moving toward vaccine passports so that people can move around from country to country. Do you think we need something like this, especially on a corporate level, with companies that, work for companies that might be in another country?
Yes, Carl. I mean, I think as we now look forward to opening up, there obviously needs to be ways of verifying that can happen safely. The European Commission has proposed a digital green pass, and we're waiting at the moment to see the details of that presented. But I think essentially, as I understand it, we're looking at proof a person has been vaccinated, results tests for those that couldn't be vaccinated, in terms of testing for COVID, and information on COVID recovery where that's necessary. But this, I think, is very complicated. I think we need to respect data protection rules. We need to respect security. We need to respect privacy. So I think we're going to have to tread slowly and make sure that we get this right, and that's obviously what the Commission is doing at the moment.
Can you give us a general idea about how your conversations over the last year have changed with executives at companies around the world when they are thinking about investing in Ireland before coronavirus, and what are they like now? Yeah, so I think, firstly, they've changed because we're doing this all virtually, and like everybody else, we've pivoted virtually, and some companies have managed to make that transition very quickly, and maybe some less so, and it's obviously much more difficult for companies making physical goods, manufacturing. We have kept all of manufacturing open in Ireland. Most of it is deemed essential because of the types of products that are being made. In terms of the discussions with executives, the fundamentals of investing in a country still remain the same. Executives are interested in those same things. What everybody is discussing, obviously, is what is the future of work. And, I think it's clear at this point that we're not going back to where we were, Monday to Friday, core hours in the office. There's going to be much greater flexibility. I think that's a given at this point. But also there is a role for the office, and I think that's clear, and that's what we're hearing from the companies we're engaging with, because for reasons of innovation, collaboration, building team culture, onboarding new team members is a big issue, and also ensuring that those coming into companies at more junior levels, that there is some sort of training or apprenticeship model. Much easier, obviously, to do on-site than it is to do remotely. So there is still a future for the office in that regard. I want to get your thoughts on potential the tax increase for corporations here in the United States. We had a great story, Nancy Cook and Laura Davis and colleagues breaking this news yesterday, that President Biden is eyeing his first major tax hike since 1993 in this next economic plan. One of those includes raising the corporate tax rate to 28% from 21%. How would that change the way that American companies think about doing business in Ireland? Would it make Ireland more attractive?
Well, listen, I mean, I think it depends on the overall offering. And similar to when, I suppose, the last administration introduced its tax changes. And I think I said at the time, you know, the devil is basically in the detail here, and, you know, how it's done and what counteracting measures are introduced to support businesses. I think you have to see all of that. The headline rate is one thing. I think also we are obviously facing into probably significant global changes on the tax front during the course of this year. The OECD process has, I think, increased momentum. Janet Yellen has, I think, made it clear that there won't be a voluntary opt-out for U.S. companies, and therefore I think the prospect of a deal politically on global tax is probably further ahead now than it has been for some time. But again, until we see what happens there under both the pillars they're looking at, it's difficult to say exactly what impact it will have. From Ireland's perspective, you know, we've a 12.5% corporation tax rate. It is consistent, it's transparent, and it's stable and has been there for a long time. And I think, you know, while people look at our rate sometimes and think that's the answer potentially, because it's a low rate, it's actually around the stability of the rate is probably the most important thing.
Right. And interesting, right, at a time where all of a sudden you could see the U.S. corporate tax rate go from 21% to a higher rate, like a lot of movement in just a few years. Having said that, I got to ask you, Martin, what's the outlook? What does the global economic environment look like for you and for Ireland post-pandemic? And especially at a time where I think there's still a lot of countries that are thinking about what do we need to do domestically to heal our societies after COVID?
Yeah, I think it's very challenging, I think is the short answer. I think that, you know, we had hoped probably that we would have unwound restrictions in a lot of countries before now. Having said that, I think, you know, if you had told us a year ago that we would have the vaccines options that we have and that they were tested and now being deployed, I think that's a really fantastic outcome. From an FDI perspective, I mean, all the global projections suggest that FDI globally is going to decline significantly during the course of 2021 again, some with estimates up to 40% decline. So it's going to be a really challenging environment for us and for other colleagues across the globe as we seek foreign direct investment. And, you know, there's going to be a smaller pool, and everybody obviously is going to be looking for that investment because they are trying to drive economic growth within their economies to pay for the cost of the pandemic. And there's been significant costs for all countries, you know, whether they are healthcare costs, whether they are supports to business, or they are supports to individuals in terms of a social safety net.
How happy are you that we're not talking Brexit?
You know, I'm always happy to talk Brexit with you, Carol.
But it was amazing, like how many times we've talked about it in the past years.
It's done to some extent in that we are now talking post-Brexit. There is a trade and cooperation agreement. And that's a positive, you know. I think I would have said this time last year that the objective is to have an agreement between the EU and the UK. It's not ideal. It probably isn't as comprehensive maybe as we would have liked, but it's an agreement nonetheless. And I suppose the core aspects of that from Ireland's perspective are in there, and one of those core aspects obviously was that we prevent a hard border on the island of Ireland between north and south, and that has been achieved, albeit it has been very challenging to achieve that. And implementing all of this now is the challenge we're going to be dealing with in the days, months, and years ahead.
Hey, Martin, we only have 10 seconds left, but a year from now, are we doing this in person? Are you back here with us in the studio?
I certainly will be making every effort to do that, and I hope you guys will have me. And let's be optimistic. Certainly I have an optimism bias, and I think we will be.
Well, our studio door always open to you, and we look forward to it. Martin, be well, stay safe, and look forward to catching up with you again in the future. Martin Shanahan, he's the CEO at IDA Ireland, joining us where it's almost 9 o'clock at night in Dublin.
Yeah, thanks for staying up late for us.
Yeah, thanks for staying with me
for
this whole day.
Of course.
Really appreciate it. All right, everybody, have a safe evening for the whole Bloomberg Business Week team. I'm Carol Master along with Tim Stanovic, and this is Bloomberg.
Francisco, and this is Bloomberg Technology. First, we start with breaking news out of Uber, the company planning to reclassify all 70,000 of its UK drivers as workers after a landmark ruling from the Supreme Court. This means drivers will be entitled to minimum wage, vacation pay, and other benefits. Will it impact Uber in other markets? We will discuss. Plus, as vaccines roll out fast and furious, will a travel rebound look like the Roaring 20s? The CEO of Expedia, who took the helm in the middle of the pandemic, will join us to share his outlook on how we travel may or may not be changed forever. And this as a debate over vaccine distribution continues around the world, with President Biden under pressure to share supplies with the world before all Americans are vaccinated. Melinda Gates, whose Gates Foundation has contributed $1.75 billion to fight COVID, joins us to talk about the road to post-pandemic equality and recovery, which she says starts with women. We'll get to all of that in a moment, but first, getting a look at the markets. U.S. stocks falling for the first time in 6 trading sessions. Our Kriti Gupta has more on the day. Kriti, walk us through it.
Well, Emily, a lot of red on the screen in anticipation of that Fed meeting tomorrow. A lot of de-risking, all except for tech. So you can look at the screen behind me. You really saw the S&P 500 close in the red. The New York Bank Index closed about flat, but the NASDAQ 100, a notable outperformer. And Emily, this comes in tandem with yields, of course, that were higher. So this is really tells you that that inverse correlation momentarily, that yields versus tech momentarily pausing for a second. Another spot that saw a lot of love, semiconductors. So not only today on an risk-off day, 1.3% gains in the market, but on a yearly basis, semiconductors really ramping up. Look at the chart behind me. You can see that escalation, 136% in just 1 year. I do also want to hit some of the individual movers we saw in today's session. Tesla, one of the worst performers today, but also the one that was weighing the S&P 500 as a whole. What was lifting it? That was Apple. So you can really see those big tech players kind of at odds with each other, and other names not doing well. Online retailers, likes of Shopify, Etsy, and then the ones behind the screen, Poshmark and Chewy. Those really tell you that there was a lot of pain in the tech sector, but some spots of good news as well. Lots of earnings stories as well for that. I'm going to turn to Katie Greifeld.
Thanks, Kriti. And I want to highlight CrowdStrike in particular. They're gaining after hours after they reported first quarter revenue and EPS forecasts that came in higher than expectations. That revenue forecast in particular, the low end of that range is above the highest Wall Street estimate. And clearly that's giving a lift to the stock in after hours trading. CrowdStrike shares are currently over 6% higher and rising. And that's after the stock fell more than 2% in regular trading ahead of these forecasts. Now, CrowdStrike is still down about 7% year to date, but clearly traders see a lot to like in this report. But I also want to talk about breaking Uber news that the rideshare company will reclassify its drivers as workers. The company was expected to fight this ruling, so it's a bit of a surprise, and it's shaking out in after-hours trading. You can see Uber, it fell as much as 3%. It's down about 1.5% currently, and that's after it fell over 2% in regular trading. Now, that's because even though this is a UK ruling, it may impact how the company is structured globally, and clearly traders don't like that uncertainty, Emily.
Absolutely. We're going to talk about that more now. Katie Greifeld, Kriti Gupta, thank you so much for that roundup. Continuing on this breaking news out of Uber, the ride-sharing company announcing it will reclassify all 70,000 of its UK drivers as workers, this entitling all drivers to minimum wage, vacation pay, other benefits after a huge ruling from the Supreme Court came down last month. Now, the changes are limited to the UK, Uber's biggest European market, but this, of course, raises questions about whether the company is willing to consider adapting its model in other countries. Joining us now to discuss Bloomberg's Priya Anand. Priya, walk us through what this means. Of course, this has been a huge debate since almost the very beginning of the company, and now we see in the UK them making this dramatic change.
Exactly. This issue has been ongoing in the company's entire history. It's been a push and pull for years now. So to see this happening now, it's definitely a big turning point, to say the least. And as you mentioned, drivers will be entitled to a minimum wage that shakes out to about $12.11 when you convert to US dollars. Vacation pay based on about 12% of their earnings every 2 weeks. Uber will be paying 3% of a driver's earnings into a pension plan. So very different from not having those things before, right? I mean, Uber has said that this minimum wage, their drivers on average earn more than that, so that might not be a factor in costs the company might have to face as a result. But this is a huge deal, and it sets a precedent globally. I mean, everyone in this world will be watching this.
So I guess the big question is, could we see this expand to other markets? Of course, we know in California, Prop 22 passed, meaning that they didn't have to reclassify drivers, at least in this state. But, this is clearly a global company, and could it have broader implications?
That is the key question here. What kind of implications we'll see here in the U.S., where Uber has for some time now lobbied for a separate labor class with limited benefits. One difference between the UK and the US is that the UK has a distinction between employees versus workers. And in this change, these Uber drivers will be classified as workers. Now, in the US, we don't have that, and Uber has been lobbying for a separate labor class with limited benefits, like I mentioned. But you've got to think this is going to influence policymakers worldwide who are watching.
What are the financial implications for drivers? I mean, how often are you seeing them making short of minimum wage?
Uber says that the added costs to the company will mostly come from holiday payments, so for that vacation fund and the pension contributions, rather than this minimum wage. They say that on average, Uber drivers already earn 17 pounds an hour and for 14 pounds an hour in the rest of the country, which puts them above the 8.72 pounds per hour minimum wage that they'll have to start doling out. So they say that drivers are already above that level, and that won't affect them financially. But for those drivers who maybe only log into the app sometimes and are doing only a certain number of trips a week, not doing this, on more of a full-time basis, it does provide a floor that they did not have before.
Could this have an impact on gig economy companies more broadly? Obviously there are a number of different ride-sharing companies around the world, different food delivery companies that are bigger in Europe than elsewhere. Could this have a ripple effect across the entire sharing economy ecosystem?
Given that Uber is one of the most prominent companies in this space and really defined this whole category over the years of gig labor, they were at the forefront of this. It would be very shocking to not see a ripple effect among other companies in this space, I think. To me, at least, it would be very surprising to not see other companies take action based on this or be forced to take action based on this. It's obviously going to set some kind of precedent.
All right, Priya Anand reporting for us. Thanks so much, Priya, for your take. On a programming note, tomorrow at 5 p.m. Eastern Time, right here on Bloomberg Technology, we will be speaking exclusively to Uber CEO Dara Khosrowshahi just 1 year after the pandemic shut down across the United States. This is a conversation you do not want to miss. And a story we continue to watch, Google is cutting the fees it takes from developers on app sales in half. That follows a similar move by Apple last year. Google is reducing its fees from 30% to 15% of the first $1 million in revenue. The company saying 99% of developers will benefit from that change. All right, coming up, the global response to COVID-19. We're going to hear from Melinda Gates about how her foundation is assisting in the fight, who's most at risk from the pandemic. What is next? Part of our continuing coverage of the pandemic 1 year on. This is Bloomberg. The vaccine rollout across Europe has hit headwinds as more countries across the continent are suspending the AstraZeneca vaccine. EU governments have said they would lift suspensions on the drug as soon as the European Medicines Agency advises it's safe, this after reports of abnormal blood clotting. Across the rest of the world, vaccine doses are continuing to be administered, with Israel having the highest percentage of residents inoculated so far. As part of the Bloomberg Equality Summit, I spoke with Melinda Gates on the global COVID response and asked how her foundation is making a difference, where the vaccine rollout is working and not working.
Well, I think it's working in some of our high-income countries. We're starting to finally see, much broader distribution, for instance, in the United States and in some of the European countries, but it is not at all working yet for middle and low-income countries. And, those are places where people are struggling. They have their loved ones who get ill. They can't get them to a hospital, much less an ICU. And so they are really still struggling in many countries around the world.
So there's obviously a moral case for vaccine equity, but what about the economic case? Why should somebody in New York or San Francisco care when somebody in Africa gets the vaccine?
Well, absolutely, it's the right moral thing to do. But economically, we're not going to have as swift a recovery in the United States or in Europe if we don't make sure that everybody gets vaccinated, because what will happen is this disease, we know it crosses borders. We've seen it all over the world. And so as these variants break out, they will absolutely come back into the United States and Europe and Japan. And so our supply chains won't fully be up and running. We won't get our travel industry fully and leisure up and running, or the business community up and running in terms of travel. So economically, if we're going to reopen the global economy, we've got to take care of this everywhere.
So if vaccines aren't distributed equally, obviously there's economic consequences. There will also be more deaths. What are the consequences of that?
Well, more deaths, it's a tragedy for every family that experiences a loss. But it's also, I think we have to remember, it's wreaking havoc on the healthcare systems of these countries. And so what it means is a mom who is pregnant doesn't go in for her antenatal visits. She doesn't go in for delivery, so she has an unsafe delivery at home. It means we have 49 million women that won't get contraceptives during this pandemic. That means 15 million unplanned pregnancies in 1 year. That's like adding up the cities of Chicago, New York, and LA and saying we're going to have 15 million unplanned pregnancies. Wow.
Vaccine nationalism is stepping up as this continues. You've got nations competing for supplies. Do you see a better way?
Well, I think, we started off as a world with a good way, which is to try and pool both the demand and match it to what would be the supply, and to have financing for that. The U.S. didn't come into that financing until the last stimulus bill that happened in December. They finally put money forward for Gavi, which helps with this facility called COVAX to purchase vaccines and get it organized. We just now are coming in with this latest stimulus bill for testing and treatment. But, that would have been the way to go, is to really match global demand and supply, and first get it out to all the healthcare workers all over the world before you even begin then going to vulnerable populations.
Meantime, there's continued disinformation about vaccines. How do you and Bill see that kind of misinformation?
Yeah, when you see it, I will say it's incredibly disheartening, because honestly, it causes death. People not doing the right thing, not getting their mom or their elderly father vaccinated, we'll lose more people. We are losing more people. So it's disheartening. On the other hand, as more people are getting vaccinated, just take the United States, we're seeing more demand for vaccines. So we're finally seeing the counter-cyclical part of that argument. But it's always disheartening to see something like that.
Now, a huge part of your job before the pandemic was traveling around the world, meeting people, talking to them in person in far-flung places that most of us don't get to go. How has your job changed during COVID, now that you can't make those trips?
Well, I think like so many others who are lucky enough to be able to have access to a computer and a good internet, right? I'm doing a lot of meetings online, and they are pretty continuous throughout the day. I am certainly meeting with still leaders around the world, even community organizers around the world. But I miss the, deep connection and interaction with women in her home, or a man who's working in his field, or the children. I miss that. And so I look forward to when that will return, hopefully in the next year.
In your annual letter, you and Bill said the recovery starts with women. What do you mean by that?
Well, women have had the most devastation, women and people of color, during this crisis. We know women have left the labor force in droves. We know they're at home with this complete caregiving crisis, taking care of the young, taking care of the elderly. And so if we're going to have a full response and a swift response, we have to stop thinking as a world of gender equality as this nice thing to do when we get to it, or this side issue. No, it is the central issue. If we're going to get a full recovery and a swift recovery, we've got to address all of the issues that are facing women. We are in a crisis for women and people of color in this country.
Now, the last time you and I spoke, it was about your book, The Moment of Lift, How Empowering Women Changes the World. That came out 2 years ago on the heels of Me Too. There was a lot of hope. Have you seen that play out, or have you seen progress derailed?
We've seen, I would definitely say that was a moment of optimism for me. And I would say now I think women are in a moment of crisis. So we've seen a lot of work derailed. We've seen women women in the last 30 years were coming out of poverty as a globe, and now we're seeing a huge setback in that arena. We're seeing setback in the labor force. The number of women who've stepped back from the labor force in the United States, 2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis. But then on the flip side, I see these female leaders, Prime Minister Jacinda Ardern, Prime Minister Merkel, how well their countries are doing. Or I see these self-help groups in India that immediately mobilized and got messages about COVID out to millions of people in northern India. So I see the hope on the other side, but there's a lot of work to do.
Melinda Gates, co-founder of the Bill and Melinda Gates Foundation. We're going to have much more of that conversation at the Bloomberg Equality Summit, such as which companies are leading the way to close gaps in healthcare distribution, responsible investing, retail, technology, and more. The 4th annual Bloomberg Equality Summit convenes leaders at the front lines of industry and policy to showcase these and other topics, as well as the steps they are taking to move forward. We'll bring you more of the highlights tomorrow and that full conversation with Melinda Gates. Coming up, it is game on in the electric car space as Volkswagen aims to overtake Tesla as the global electric car leader. We're going to hear from the CEO of Volkswagen next. And as we head to break, let's take a look at meme stocks falling. GameStop, AMC, headphone maker Koss, Express down as well. GameStop losing about 1/3 of its value over just the last few sessions. We know Bill Gross earlier said on Bloomberg Television he's made a lot of money betting against GameStop. Will continue to follow. This is Bloomberg. Volkswagen shares surging after unveiling plans to surpass Tesla as the global electric car leader. The German car maker has swiftly gone from corporate dinosaur status to stock market darling. Volkswagen says it will standardize key technology across its sprawling industrial empire. Bloomberg's Matt Miller spoke to the CEO, Herbert Diess, earlier and asked him about the new investments.
We are heavily investing in fast charging, which is probably the biggest constraint on the customer front because of range anxiety still. There are some regions in Europe which are well covered. Germany is growing, but other regions we are really lagging behind, like Spain or Italy, and this is where our investment mostly goes. Mostly it goes into fast charging, and we're providing home charging devices. But step by step, we see that the situation will alleviate, and I would say we ramp up in parallel, no battery capacity, EV capacity, and fast charging capacity. So far, it's going well, and we think, actually, EVs have won the race. All competitors are basically following us, so we feel confident.
I look across the investments and I see $29 billion for battery factories, $30 billion in the new software focus. Obviously, it costs billions of dollars to design these new cars and put them together. How are you financing what looks like, almost $200 billion in investments to push into the electric car industry?
We have strong cash flows from our ICE business last year, and this year also we're fighting hard to get our, let's say, I wouldn't call it legacy business, but the IV business, the internal combustion engine business, we want to keep it strong and profitable, and we are working hard to keep it strong and profitable.
How long will you keep the internal combustion business? I mean, I know you want to have 50 electric car models by 2030. Am I still going to be able to buy a 911 with a gasoline engine?
You should be able to buy still. I think this transition will probably last 2 life cycles or so until 35 or probably even longer. It depends a lot on the regional strategies and policies. And also I have to say, electrification doesn't make sense in any environment or in every environment because, electrification only works for CO2 reduction on the basis that the primary energy is CO2 free. So you either use sun or solar or hydro. So, and that is why we assume that the regions will have different speeds in transition. Now Europe has really taken over with a strong push now with the new administration in the United States as well. China is keep on pushing, but there might be regions which only come probably 5, 10, 15 years later.
Volkswagen CEO Herbert Diess there. Meantime, a tiny ETF tracking innovative companies is beating one of the most famous investments on Wall Street. The Direxion Moonshot Innovators ETF is up 39% this year. Meantime, Cathie Wood's ARK Innovation ETF has risen just 3.5%. Wood's funds have faced turbulence in recent weeks, with tech getting hit hard. Coming up, we are looking at the recent rally in the tech sector. Will the momentum keep up? That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the market movers of the day and bring in Bloomberg's Kriti Gupta. Kriti, stocks falling for the first time in 6 sessions, but tech seeing a bounce back. Walk us through the day.
Well, Emily, you saw that risk-off move in the broader benchmarks. You did also see that tech outperformance. That was the story for today. That has not been the story for this year. Take a look at the chart right behind me. You can see that since the start of the year, you've really seen the S&P 500 information technology sector underperform the broader benchmark. But why is it? Is it the fundamentals or is it the technicals? And it might just be the technicals. I want to show you a chart in my Bloomberg terminal that compares the NASDAQ 100 relative to the S&P 500. So this is right now on the right side. Compare this all the way back to the middle of the chart where you're seeing that 1999 tech bubble hovering around that 3.2 ratio. So you are seeing some technical elements at play. This idea that in the past few months, we've really been hovering around that tech bubble ratio. So what will actually move this forward? I want to broaden this out though and look at some of those PE ratios because that's another way that that this market, this sector is really being evaluated. The S&P 500 trading at a 23 multiple. Tech though, Emily, way up higher, trading up at 28, one of the most expensive stock sectors in the S&P 500 by this metric. It really goes to show that even though you may have those fundamental drivers, things like investments in electric vehicles or streaming, people are still very much eyeing those valuations and they're eyeing those technical levels, Emily.
All right, Kriti Gupta, thank you so much for that update. Sticking with the markets and tech rallying, we're here with Dan Morgan, Synovus Trust Portfolio Senior Manager. So I guess the big question, Dan, is the recovery in tech something that's going to happen longer term, or are you still worried about a correction?
Hi, Emily. Well, if we look at the tech sector, it's kind of going back to your evaluation based on multiples. If we go back to the summer of 2000, tech sector was trading about 70 times earnings. So we're nowhere even close to that. Projected growth rate this year is about 20%. We've got IT budgets projected by Gartner at about 6.3%. And, I would say that we aren't anywhere close to any sort of bubble situation in terms of valuations compared to the past, and that the fundamentals are still very solid. And I think we have to bear in mind, you mentioned the S&P Information Technology Index. I mean, that's up 90% from a year ago with March lows. So we had a huge rebound in the sector. They delivered great growth last year. We've had some money rotate out of the sector and gone into some deep cyclicals, but I believe the fundamentals are still in place in regards to tech for 2021.
Meantime, I know you do hold some shares of Uber. What's your reaction to them reclassifying these 70,000 workers only in the UK for now, drivers being reclassified as workers, which entitles them to, different kinds of pay and benefits, given the potential it could happen more broadly?
And I think that's a pretty sizable amount, right, Emily? It's around 70,000 workers. And I think what that does is raise questions going forward about when will Uber become EBITDA positive? I mean, the guidance that we had before, kind of consensus, was they would do about $1.48 billion in 2022. They'd finally be positive. We have to remember both Lyft and Uber are both companies that have not made money. They are not profitable. So then it raises a question, Emily, and that is that, well, what is the impact of this UK decision to move them from being contractors to employees? And will that be kind of a groundswell that moves into other parts of the country? And eventually that really changes the model for Uber in regards to becoming profitable. So that's a really big story, and we have to follow that very closely because that'll change the dynamics in regards to the fundamental view of the stock.
Well, and does it make you question at all whether you should keep holding it or no?
Yeah, Emily, we don't have a huge position in Uber. We have a little bit of Lyft and Uber, so it's not a massive position for us. I think at this time we'll still be on a wait-and-see mode to see if that, moves over to other parts of the world. But if it did, it would definitely, I think, something that investors would change their view on the stock.
Meantime, taking a look at semis, a number of chip companies higher today. What's happening there?
Well, Emily, I think you had some upgrades from some brokerage firms. UPS did a big upgrade. You had, just kind of a positive swell going on in the group. You have to remember that, as we know, that we've gone through these shortages. So that means that there's more demand than these chip companies can provide, which is a great environment for them. Sectors that weren't doing as well, like automotive and industrials, we're getting a nice rebound there. So really, if you look at the chip sector right now, it's really executing on all cylinders compared to where we were, let's say, a year ago. So I think you're starting to see more analysts come out and upgrading the group, and we saw that today, and that's what led to KLA, Tennecore, Applied Materials, Lam Research, all were up on that news. So things are going very well right now in the chip sector.
Let's talk about cyber then. CrowdStrike reporting, and obviously we're in a completely new threat landscape right now, given what we've seen from SolarWinds and then the Microsoft email hack. What's your take on CrowdStrike as a name that can help fight some of this?
Well, it's interesting, Emily, because if you look at their annual reoccurring revenue, it was up 75%. They came out, they beat on earnings, they beat on sales. The only negative that came out that kind of led to the stock pulling back was the fact that their guidance for earnings per share estimate for next year was a little bit below the street. But if you can kind of get away from the minutia of the data today and look at the bigger picture, you've got a company growing revenues about 80% per year. They're a company that is point-to-point, all cloud, not like Symantec and McAfee, some of their older competitors that have been migrating to the cloud. And like you just said, Emily, we're going to continue to get these threats across the board, and they're really positioned nicely. So a company that's really growing at a really fast pace right now that seems to be in all the right spots. And of course, it's a cloud play, it's in security, and fundamentals look really strong. So we would expect that stock to continue to execute after a very strong quarter.
All right, Dan Morgan, Synovus Trust Portfolio Senior Manager. Thank you, Dan, as always, for stopping by. Now, T-Mobile is kicking off a bond sale to help buy new high-speed spectrum licenses. The mobile carrier selling up to $3 billion in bonds. It'll use $2 billion to buy the licenses and the rest to refinance debt. Last week, Verizon sold $25 billion in bonds to finance 5G airwave purchases. And coming up, the travel industry is finally seeing a pickup in sales a year into the pandemic shutdown. Expedia's CEO joins us next to talk about the hard lessons he's learned in the last year and what travel will look like in the years ahead. That's next, part of our Pandemic 1 Year On series. This is Bloomberg.
face the hard truth that travel, we did not know when it was going to return. And we knew that when travel returned, it would be different. It would never be the same.
That was Airbnb CEO Brian Chesky sharing what went through his mind as the early days of the pandemic lockdowns drove in $1 billion of cancellations. But now, just 1 year after the lockdown started in the U.S., the Transportation Security Administration has recorded a surge in airport traffic, with the number of check-ins actually catching up to last year's levels. U.S. airlines carried more passengers Friday and Sunday than at any point since a year ago, exceeding 1.3 billion travelers on both days and showing solid signs of recovery. Joining us now to discuss the past year in travel and what the post-pandemic looks like, Expedia CEO Peter Kern. Peter, thank you so much for joining us. You have had quite a year. I'd like to start with the signs you're seeing of pent-up demand. Some folks have speculated it's going to be like the Roaring 20s by summer, if not sooner. How would you characterize the demand we're expecting to see?
Well, thanks for having me, Emily. And I think we are definitely seeing signs of enthusiasm throughout the world, although, of course, it depends entirely on the situation and different geographies. So, in Europe today, it's not so great. There's a lot of lockdowns going on. But in North America, we've seen a ton of enthusiasm for travel. You mentioned the TSA numbers. Spring break has certainly sprung, and in the Southeast and in Mexico and other places where it's warm and people feel like they can get outside and have fairly normal vacations. There's been huge demand in those places. In many of those places, we're outperforming where we were 2 years ago at this time. So we're seeing these real demand spikes in places where people can enjoy a great vacation. But obviously there are parts of the world and parts of this country that are still much lower, including cities and other spots where perhaps you can't have the same kind of vacation you would have had a couple of years ago.
Now, Brian Chesky, the CEO of Airbnb, has reiterated his comment that he made to me last June, where he said travel will never be the same. What parts of travel do you think will be forever changed? What parts do you think will truly bounce back, go back to the way they were?
Yeah, I've heard Brian say that, and I have tons of admiration for Brian, but I disagree with him on this. I think travel will largely go back to what we knew. I think I'm hard-pressed to point to an area that will not rebound. Lots of people like to pick on corporate travel, and I think there are reasons to think that will take somewhat longer to come back. And it may be forever changed in the sense that internal corporate travel and other kinds of travel may be different, but equally, if we have more remote work, there may be more use cases where business people need to travel to get back together with their own teams. So I don't think we know yet. I'd say corporate's the biggest question mark, but I'm generally bullish that it will largely be back. And as far as leisure, as far as where people go, how they go, for sure they've discovered some new things in this. And in our case, Vrbo has been a very strong use case for customers. And we think it's terrific that new customers have had a chance to experience what Vrbo is all about. And for sure, they will think about that when they're planning future vacations. But I don't think everyone's decided that they'd rather go to a national park than Paris or Rome or Shanghai. I think they've just had to adapt, and they've found great opportunities to vacation. I think it will largely be back to the way we knew it, and I think that'll be great for the industry and great for me and you, who probably are dying to travel just like everybody else.
Interesting, you hitting on some of, taking a counter position to some of Brian Chesky's points there. Let's talk about Vrbo versus Airbnb. Can you tell us how much inventory overlap there is at this point, and what your sort of playbook is to differentiate it from Airbnb, given that you do rely more, as I understand it, on traffic from Google?
Well, that's historically somewhat true, and we certainly, Airbnb has said they're out of performance marketing. We are not, but we have been extremely robust and successful during the pandemic. In fact, in all of our largest markets, we've grown share against Airbnb And we've been, very successful, as I say, because consumers are really looking for our use case. The overlap we don't really publish, and it's not precise since we don't have each other's exact numbers, but there is some, considerable overlap. I would say our differentiator is we're all about the whole home experience. Which has been, again, really important during COVID. People want the four walls of their building to themselves, whether it's a condo or a home, and there's been huge demand for it, and we've driven great success. I know Airbnb likes to quote their numbers. We've driven more new host booking value than Airbnb has during the same period, and on average, our hosts make substantially more than an Airbnb average host. So we think we have a lot of great attributes for hosts. We think we have terrific inventory for consumers. We don't cover every use case, and there are places we are not. That certainly Airbnb is, but in the places where we are strong, we've been very strong during this.
Well, anecdotally, I've definitely noticed some better prices on Vrbo, so I will say that. When do you see hotels coming back to pre-pandemic levels? Will hotels ever come back to pre-pandemic levels?
I have zero doubt in my mind that hotels will be back. In fact, in the places I mentioned, like South Florida, like Mexico, again, we are seeing booking levels at or above, 2-year ago levels, so normalized levels. It's really a question of where and when and where, which is to say, this summer, if you want to go to a beach that you love, or to Mexico or the Caribbean, you will be hard pressed to find opportunities in homes or hotels. I think a lot of consumers will be surprised that when they get their vaccine or whenever they feel confident to go, there may not be much left to go to. Obviously, we'll have tons of other things, lakes and mountains and other great places to go. But I think what you'll see is all of that will fill in, with the exception potentially being that it takes longer for cities to come back, depending on how cities open up. So when New York opens the theater, when museums are open again across the globe, when those kinds of opportunities, when restaurants are open and you can eat at them normally, I think people will flow back into all of those places. But in the meantime, it's really a question of what is consumer confidence in terms of your confidence in your safety. And then what is the place going to be like? If you can go to a beach in Mexico, it's going to feel a lot like a beach in Mexico. If you go to a city where a lot of restaurants are still closed, or you can't go to the theater or whatever it might be, then that's going to be a very different experience, and you might wait.
Right. Now, Peter, you took over last year at the height of the pandemic terror, in the middle of the travel halt, the flood of cancellation. So you've had quite a year. You went through a restructuring, 3,000 jobs cut. I'm curious what you've learned from that, and how you think Expedia, even if travel comes back, how might Expedia be a different business going forward, given what you've been through?
Yeah, well, in a lot of ways, obviously it was a terrible time. We experienced what you've heard from all travel CEOs across the globe. We had huge cancellations. We had a lot of customer issues to deal with. We had supplier issues to deal with. And, we try to take care of our suppliers just like we try to take care of our customers. So it was a very tough time. There was obviously questions about the industry, et cetera. I was actually never that worried that travel wouldn't be back. I'm no scientist, and I certainly had no right to believe we'd be back this fast and this robustly. But it really kind of gave us an opportunity to get really serious about what we wanted our future to be and get after the change we wanted to make in terms of how we put more energy into our products, into our technology, into the underpinning of our business, how we supported suppliers. So we've really taken the year and really put ourselves into that more than anything. And we think we're going to be a much better, different company in the future, stronger for our customers, better products, better ways to shop, more reasons to come back. Sorry. Go ahead.
Peter Kern, CEO of Expedia. We'll have to leave it there. But, fascinating to hear your outlook on what is to come after what you've been through. Of course, we'll be watching. Okay?
Thanks.
Coming up, we're going to take a closer look at the co-founder of one of the most popular new social networks, and that is Clubhouse. Everything you need to know and didn't know about the app's co-founder, Paul Davison, next. This is Bloomberg.
about voice. It's relatively new in the world of social networking, at least in the US, but it is the oldest medium. We've been gathering with other people and talking for as long as civilization has existed. It's something that's really human. And so our goal is to create a new type of network that's more about those authentic human connections than about gaining likes or follows. And we found that voice is a really powerful medium.
Clubhouse co-founder Paul Davison there. Joining me now, Bloomberg's Ellen Hewitt, who just wrote a revealing profile on Davison. Ellen, thank you so much for joining us. So I've been following Paul over the last 10 years. We had him on the show when he did Highlight, which was this social network that got a burst of energy but then fizzled. And here we are at Clubhouse. Tell us a little bit more about his journey.
Right. So Paul Davison has been kind of a fixture in Silicon Valley for at least the last 15 years. And he's known in the Valley as someone who kind of has a lot of ideas about different social apps. Like, he seems to be fascinated by different ways of using new technology to connect people. And you've seen that in some of the things that he's made over the last decade, including, as you mentioned, Highlight, which was a very popular, for a very short period of time, app in 2012. It was actually kind of the breakout hit of South by Southwest Tech Festival in 2012. And it used sort of location of other smartphones near you to show you, oh, your friend or maybe a mutual friend is nearby, or maybe you're next to someone who has the same interest in the same sports team as you. And he's also made other apps that, you know, automatically encourage you to share your camera roll with a pre-selected set of friends. And so it's always this, like, he has a reputation for building these apps that kind of push the boundaries of what you think your social apps should encourage you to do and maybe how much you should share.
So how is his sort of personality and experience shaping the way Clubhouse is developing now? And I'm curious if you think Clubhouse is certainly bigger than Highlight ever was, but is it the next big thing or not?
It's hard to tell. Clubhouse has, you know, it actually is going to turn 1 year old tomorrow. It's, you know, it obviously started a little bit before that, but tomorrow marks the 1 year mark since Paul and Rohan Seth, his co-founders, started their profiles on the app. So that's the anniversary that they like to mark. And so, you know, Clubhouse has had a year in which it has steadily grown in popularity. It has raised a lot of money, including, you know, at $1 billion valuation, which these days, you know, is not so uncommon, but to reach that point after, you know, less than a year of being public or, you know, somewhat publicly available, it clearly has momentum behind it. I think, obviously, as with these apps, it's a little hard to tell exactly how long they'll stay at the top, but you're seeing this ecosystem build up on Clubhouse of not just, you know, famous people, but also people who are kind of earning their own place as like Clubhouse influencers, or there's like interesting little pockets of Clubhouse that are coming up. So I'm seeing the app mature. I'm really curious to see where it'll go next. And as it relates to Paul's personality, you know, I've talked to a lot of people who used to work with him, and they all say he's super optimistic, super energetic, and really likes to come up with these new ideas. But that optimism can sometimes blind him to the ways in which his apps can be used for more nefarious things. Like, we talked to someone who said, yeah, you know, when he built something like Highlight, he wasn't thinking about, like, what if you have a stalker? What if someone is trying to hurt you? You know, this app could share more information than you would want. Instead, he's thinking about,
right,
you know, people are great. How can we connect them?
Certainly is going to be facing big, important questions ahead that have faced social networks that have come before. Bloomberg's Ellen Hewitt, really detailed, wonderful profile of Paul Davison at Bloomberg.com. Check it out. And a quick word about an upcoming event we are doing on Clubhouse. You can join me this Thursday, 3:30 p.m. Pacific, about a half hour after the show, 6:30 p.m. Eastern, on Bloomberg Opinions Club page. I'm going to be moderating a discussion on the post-pandemic tech